Welcome everyone, good afternoon. Hope everybody is enjoying their Friday. Scott G here with the Simple Trading Life, and we're getting ready for our Friday live stream. So hopefully we're going to have a good crowd today. We'll go over some things on ES, and I had a request to kind of go over some supply and demand basics today, which we've done in the past, but obviously trading is just always an ongoing thing. Everybody's learning, and we want to always refresh our skills. So let me get set up here. We're going to give everybody just a minute or two to join. It says we've already got some folks in here, so welcome. And you'll see where I type hello to everyone down there. That's where you can type comments or questions. I always have you right here, have your comments right here next to me. So we'll get started here very shortly. It's just now 2:01, so we'll give some time for folks to join. As you can see, we had this nice drop this morning, and we're going to talk about that here shortly and how we were anticipating that in our room. Okay, I know maybe some people weren't on Twitter or other places, but we were anticipating it. In fact, I had a specific target in mind early, and we went right to it, first candle. So let me... Okay, is that better? Hopefully everybody can hear me. I see we got new people joining too. Can everyone hear me okay? Is the volume good? No doubling up? Awesome. All I did was unplug and plug back in. So when in doubt, right? When in doubt, pound on it. Get the hammer out. Okay, I see we got people joining us now. So everybody, welcome. Hey, Jose, good to see you. Glad you can hear well. Jose's one of our regulars. So anyway, we're going to go ahead and get started, and then as more people join us, they'll catch up and they can watch the recording as well. So this morning, how did we know that price was likely to make this drop? Okay. Well, we didn't know it was going to come all the way down here, right? And I'll show you that here in a second. But we did anticipate that we're going to have downside movement. So starting at 4:30, we started this uptrend right here, this nice strong move to the upside. Did we have an idea that price would probably bounce on this strong move to the downside? We did. Let's come right back over here. We have this level of structure, and actually could carry across to here. But you see this where it came up and it just kept testing, and then boom, then we broke through, right? So we had this level of structure here. So that's where you should be anticipating that you're going to have some support and maybe even see a bounce, which we did. Okay, and yesterday, let's just go back, yesterday, but the start of the session, had somebody in our room asking me if price started to break down yesterday, did I see it, and they threw out some numbers, and I can't remember what they were, but did I see it going down significantly? This would have been at the open of the overnight session, and I said no. And I said the reason being, and I gave these targets, was this wick here, also this wick here. All right, and I said I wasn't really interested in anything short at that point. And what happened? You can see right when it got down to the bottom of this wick, what did it do? It bounced twice, once, then twice. Then it came over here to the 20, came up here right underneath the 200, and that's when we finally got the strong move down. And again, that was at 12:30 at night. So here on the midnight candle and then the 12:30 candle, we made the strong move to the downside, and you see this right here. Okay, we bounced right here at this level of structure. Now, some people, right, I don't think a whole lot of you were probably up at that hour. I know I wasn't. But a lot of people probably thought we would get down into here, right? Down near the bottom of this candle. Hey, we're below the 20. We're just going to keep on going at least down to here. But you've got to always look to the left. And you got to see, okay, what makes sense, right? All right, if we extended this across, right, this level has been an important level for a while now. Okay, it's a level of structure right across here. So even though this would have poked above it, if I extended that across, right, we came up, we couldn't get through. 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 And eventually, we blasted through there. All right, so now what's the old saying, right? Resistance becomes support. So when we come back down to test this same level, we should expect it to at least bounce, which it did. All right, so then we got this strong move to the upside. Again, back up near the 200 and right up around here. Okay, you see this? You could actually draw a little level structure right up through here. In fact, let me just do it and it'll make it easier for you. Okay, come over right to the top of that wick. Okay, you see that? The visuals make it easier for you. I see it with my eyes, but I draw these in because visually it makes it easier for you to see. So we came up and tested it. Couldn't get through. Tested it, couldn't get through. Tested it again, couldn't get through. Tested it again, couldn't get through. Now, the difference is here we have this strong move to the upside. Lost a little bit of momentum right here. Okay, so that was a key indicator, right? Because look at the size of these candles. Okay, stronger candle, medium size, stronger, small candle, spinning top, candle of indecision. We took this quick poke back up into this level, and then what did we do? We sold out of there and we formed a shooting star. Okay, so now let me get a little bit closer because this will make it easier for you to see. This was gold right here. Okay, this was gold. When you see a beautiful shooting star like this, after a strong move, bouncing out of some level of support or resistance. It could be a moving average like the 200. It could be a level of structure like we had right here. It could be a resistance level, you know, like we have up here. If I brought this down, okay, a level like that. It could be something like that. When you see this, okay, this is a beautiful shooting star. We didn't even have any wick on the bottom. Wick is about maybe 2.5 times the size of the body. The body's even red. It wouldn't matter if it's green or red, but it's better if it's red, right? Because that means right here's where the candle opened, went green, then came all the way back down through the range and went red, forming this shooting star. And it came after a slowdown in momentum. Okay, and how do we know? Look down here. All right, remember, what do we use RSI for? We don't use it for overbought and oversold. We use it just to help us gauge momentum. So if I'm right here, okay, look straight up to that candle, look what was already happening. It was already, the momentum was already starting to turn to the downside. And even though we got this spike here, look, momentum didn't spike. Right? It was already still going down when we got over here. Okay, let me put it right on it. You see that? It was already starting to turn to the downside on this candle. Then, when we get to this candle, even with that spike, momentum was already heading down. Okay? So now, you're looking for an entry when you break here. Okay, and most people are going to put their stop conservatively, probably right on the other side of the body. Okay, some people put them way up here. Now that's mostly swing traders. They're trying to give more leeway so that they don't get stopped out. But if you're more of a scalper or a day trader, you really shouldn't care if you get stopped out, right? Because you don't want that thing going against you. If it gets up here and takes that out, that's a bad sign. That is a bad sign. I've said it in here before, and it's just kind of a funny thing. I heard it from somebody else. You know, when you put stops like way up here, the guy uses the phraseology, if you're short, abort, right? If you're short, abort, because you're wrong, right? But that's a big stop there. Mostly only swing traders are going to put their stop way up there. Okay, so you know, if you're being more conservative, you're going to have it here. You might not even have it that much. Okay, you may have it down in here, just a few ticks or whatever, or $1 or so. You can see what price did, right? It opened, it just barely moved up, and then what happened? We started this long, it eventually came all the way down here, but we started this long, steady move to the downside. Now, the way that I prefer to play these is you have specific targets. So maybe it's this level of structure here, or, and I've already taken it off the screen, but I'm going to put it back on because I was asked by one of the members in our room if I would cover some supply and demand today. All right, so what we have over here is we have a level of demand. Okay, we had a rally, base, rally, and you see the strong candle. This, more than anything, is what creates this. All right, now I'm going to draw this in for you. When I am doing supply and demand, you're always going to see two blue lines. And it's going to be the top of these basing candles. That doesn't even have to be exact right now. Okay, and then all the way down here to the bottom of this wick. Okay, you can just sort of, this was actually, the actual number was 30, 45, 50. And down here it was 30, 34, 25, I think. Let me look. Yes, 30, 34, 25. All right, so here was a level of demand. It was created by this rally, base, rally, which is not the strongest. Okay, we're going to talk about what the strongest types of demand zones or supply zones are. Okay, but these can be very effective. So then price came up here, got up here, and as you can see, we already talked about this, could not get through this level right here. Just couldn't do it. Then we got our beautiful shooting star. You could have entered there. So my target, and I talked about it in the room. I talked about it. So if you guys are new, I see a bunch new people have joined us here. If you're new, go to simpletradinglife.com. You can join our room for free. There's a free chat room button. Just join our room for free. And I put this in the room this morning. My target was down here around 30.45 to 30.40. Kind of in that area, like that would be about right here. So here to here was where I was thinking it was going to go, and that we would most likely see some sort of a bounce. Well, what happened? Let's bring this over here, okay, because we want to make it like it was real time. Get it over here. Okay, so before any of this happened, okay, before any of what you're about to see happen, in my room, I said, based on what I can see, it looks like we're going to have downside momentum. Why was I saying that? Well, first of all, we were already in a downside move because of this shooting star. Second of all, let's look down here. Again, we use the RSI totally different than the way it's designed. We don't care about oversold, overbought. What kind of momentum? That's what we're using it for, to help us to gauge momentum. What kind of momentum were we in? Right? I'll draw it in. We were in downside, strong downside momentum. Not just downside. Okay? From here, going this direction. I can't draw it clear off the screen, but all right? Strong downside momentum. So this was the 9 o'clock candle. So the next candle is going to be our opening candle. And in the room, I said, okay, if what I see plays out, we could probably see more downside to the 3045 to 3040 area, which I knew was a demand zone, right? I already had it drawn in. Okay, what did the next candle do? So this would be like if it was playing out in real time. Boom, very first candle of the day, it went right where? It went right to the top of the demand zone. And then what did it do? It bounced, right? When it got down here, this was one big red candle, and then it bounced. That's what you would expect when you first enter, and that would be the first entry into this demand zone. So I wanted to talk a little bit today when the person in our room asked if I would cover a little bit of supply and demand basics today. I said I would. One of the things I want everybody to understand is that some zones will be stronger than others. Now there's always going to be several different factors that play into this. Now we had strong downside momentum. The stronger the downside momentum, the more likely it's possible that they could break through. Okay? That they could break through. But we, on this very first candle, we did get the bounce. We got into the top and we bounced. All right? But you look down here, even with the bounce, what kind of momentum do we have? Strong downside. So then what was the next candle? Oh my gosh, look at that. Okay, there's the next candle. Okay, even stronger to the downside. All right, and what did we do? We broke through, and you don't consider it breaking through until it holds. Well, that's a hold. What is a hold? When the candle closes below, okay, below here, it's broke through and held the zone. And the reason we say that is sometimes, I'm looking for an example. All right, like right here. See where this pierced, okay, this support level, but where did it finish? It actually finished green, right? So that support level held. Even though it pierced through there, look where it finished. It held. So it's the same thing when you're talking about a supply or demand zone. If it comes down through here and just pierces, but then it finishes way up here, the zone held. But this one did not. We broke it and we held to the downside because we closed right here. All right, and look at that momentum. It's even getting steeper. It was steeper to begin with. Now it's really diving. Okay, so now what should you be looking at? You should be looking to the left, okay, looking at these wicks. Okay, on this candle, we got down there, but we couldn't hold these wicks. These are big wicks. Then we also had this big wick in conjunction with this demand zone. Now, why would I say this demand zone that we're looking at right here is stronger than this one? Okay, I'm going to tell you. This is what they call a drop base rally. Drop base rally. So the strongest zones you can have are drop base rallies or a rally base drop. Okay, why? Think about it logically. Why would that be stronger than necessarily a rally base rally or a drop base drop? Okay, why, from a logical standpoint, why would this be stronger than this? Okay, if you're going up, over, and then up. Okay, very simply, it's because momentum, right? Momentum was diving to the downside, and this is really what you want to see. These are the best zones. Strong drop, then the base, strong rally away. So that shows you that right here, that momentum was strong coming down, and they just stopped it in its tracks. And buyers overwhelmed the sellers and drove price back up. That makes this a stronger zone than this. Now, if you don't have much momentum as price is coming down, but we did, but if you don't have much, this zone's probably going to hold. It's probably going to bounce, turn around and reverse and go the other way. But we had strong momentum this morning, right? Look at this, okay? Strong, and then it gets even stronger. Now let's go to the next candle. Boom. Next candle goes down almost all the way through the bottom of the zone, but not quite. It got right to the bottom, right to the very bottom. I actually took some trades down here on the way back up, okay? Because in my opinion, okay, look down here. Again, look down here because this is all you would have seen in real time. Okay, Look straight down. What was momentum finally starting to do? It was starting to turn. Okay, now you need to watch that, and you can't, you have to put the combination, you got to put the pieces of the puzzle together, because you can't just look at one thing. Okay, we have a combination of things going on here. Okay, one, we've already had a big move. At some point, there's going to be some exhaustion and some profit taking. That doesn't mean the move is over, but at some point, you know, you're going to expect people want to take some profits, right? So that's factor number one. Factor number two, okay, we're coming into a strong demand zone. Strong demand zone, right? So that's factor number two. You can see it was tested once before, and look how far it went away. Okay, it went way up here. That was the only thing that concerned me just a little bit. Just a little bit. Okay, because it had been tested before. Once a zone has been tested, it's never going to be as strong, but it doesn't mean that it can't be tested and hold 2 or 3 or sometimes even 4 times, but rarely. All right, but because this was a drop-based rally and these other factors that I just told you about, I kind of expected that once it got down near the bottom here, it was probably going to bounce. All right, so what happened? Oh, we bounced. We went from here all the way up to here. Now, what was my take profit targets? I posted them in my room, simpletradinglife.com, right at the top of this body. Where did price go to and then start heading the other direction? Right at the top of this body. It is a likely area on the bounce. Now, it's not saying that price won't continue higher, but for that initial bounce, that is a likely area that it's going to catch some resistance, and it did. Okay, so from here to here was, give me a second, over $22 of movement. This bounce from here up to here was over $22. Okay, can you make money on $22 move? Absolutely, right? Absolutely. Now, what you don't want to do, before we go further, what you don't want to do is you don't want to start getting into this down here. I think somebody even in the room was asking me if I thought this was going to hold or if it was going to break. I'm like, I am not interested in any downside right now. Okay, I am not interested in any downside. Too many retail traders, they're late to the party. They get in down here when they should have been up here or right here. Those were the two high probability trading opportunities. Either right here, the break of this shooting star. We've already covered all the factors why that was such a beautiful play. Or right here. Okay, when it rested right before the opening candle of the day and we had all this downside momentum, that was a beautiful play. You don't want to get in down in here. And unfortunately, way too many retail traders, that's what they mean when you hear somebody say they're late to the party or they're always late. That's because they're buying down here, selling in this case. They're going short because they might have seen this and they're like, yeah, but look at this move. What if it just goes like to the 20 and then it goes up here? So they don't do anything. Then they see it come down to here and they're like, oh, okay, see, it's going to stop. It's going to start turning around. We're going to get this first candle of the day. Bulls are going to take control because look over here. You know, overall, we're still in an uptrend. Are we really? Okay, I mean, that's a whole nother discussion. We don't have time for that one today. But, so they should have been short right here. And again, they don't. And then they see this big candle and they're like, oh, I should have got in. And then they see it bounce. Oh, I'm glad I didn't get in. And then boom, big flush. And they're like, oh, I'm missing it. I got to get in. And they buy down here, right? They buy down in this area and then this happens. And they're thinking it's going to go right on through here and just keep going down. And then this happens and it goes against them over $22 and they're pulling their hair out, like if I had any. They're pulling their hair out going, why didn't I get in up here? Why did I buy down here? Okay? They were late to the party. All right? That's what that means. Next candle, went back up. Next candle, next candle. Okay, now I'm gonna talk about this here in just a second. All right, so here we are. Now we're back to present time right here. So somebody in my room asked me, okay, they asked me over here, do you have a profit target to the upside? Do you have a profit target to the downside? And I told that person, I don't know if that person's in the room or not, but I said, I'm not interested in anything during the dead zone. When's the dead zone? It's basically 11:30 to 2 p.m. I said, I am not interested because what are we likely to do? Okay, what are we likely to do? Chop, consolidate, range. What have we done since then? Okay, look, what have we done? Exactly what I said we were going to do. Chop, consolidate, range. Now, it's after 2 o'clock. It's almost 2:30. Now we can start looking to see, okay, like if this candle comes down and breaks below here, then we look to the left and we try to decide and determine, okay, are we likely to go lower? Where are we likely to go to? What's our momentum doing? Okay, here was another thing. I pointed this out in the room. Okay, momentum flattened out. Okay, between here, look at it. It just went sideways. Just went sideways. You don't want to trade that. Up, down, up, or excuse me, up, down, right? Up, down, up, down, up, down. You don't want to trade that. Especially when you look down here and see there's no clear momentum one direction or the other. That chop will kill retail traders. It will chew you up and spit you out. You have no business trading in here. Okay, none. Right? Me as an experienced trader, I don't want any part of that. That's why I said I'm not interested in anything during the dead zone. Nothing. I don't care if it does. And even if it did, if it spiked up or spiked down, so be it. Okay, but this is what was likely, and that's exactly what happened. All right, so now what you should be watching for is, can it break below the demand zone, get below this wick right here, right? Because that's the lowest point that it's had today, right? Opening candle, here's your low of the day right there. If it can get below there, let's look, okay? Then what comes into play? All right, then what becomes likely? Let me squeeze this up so everybody can see. All right, here's our next support level. All right, that's based on a 4-hour time frame, 29.66.25. Let's go back over to the left. Let's look for some candle structure so we can make some decisions. All right, we might have to go to a higher time frame. I think we might. Nope, there it is. All right. Okay, so if it gets, here's where we're at currently, right here. See, current price. So if we get down, okay, there's a little, right here was a little rally, base rally. If we get down below here, okay, then we're looking to get down here, which is 29, just say 29.7850. All right, if we get below 29.9550, so break and hold below this wick right here, we're likely to get down into here. We get below that, we're almost for sure going to this support level. That's another very nice move to the downside. If it happens, but this is what you do, you look to the left. Now these candles, for the most part, are actually set up, because none of these wicks are huge, right? It's not like this wick here or this wick down here. These are like medium-sized wicks, small to medium-sized wicks. And you can catch some support or resistance with a medium-sized wick. But what you're really looking for was, you had this move up here, then we rested because it came back down, right? Tried to push up, pushed it back down. Then we did go higher. Okay, then we rested, then we did go higher, so on and so forth. So these are the areas here and here that you would be looking for support if price continues to drop. All right, so let's go back over. Let's see where we're at right now. Let's get back over here. Give me 1 second. There we go. Okay, so far we haven't been able to get through. Here's where we're at. See how we went right to the bottom again? Okay, we're starting a new candle. It's 2:30. Starting a new 30-minute candle. We need to get below here. And then remember, we're going to have those zones as we go lower. Now I can't even remember where they were, but that's all you do is look to the left, and you find those areas where we had the rally-based rallies. There was 2 of them way over to the left there. Those are the areas where you would look for some potential support. If you get through one, you're almost certainly going to drop to the other. You get through the other one, you're going to get down to here, 29.6625. Okay, here it goes. It's trying. See, this low is 3003. So we really need to get to about 3002 or 3001.50. Okay, you want to get $1 or 2 or $1.50 below your lowest point so that it doesn't just poke its head a couple of ticks below there and then start a big bounce to the upside. That happens to traders all the time. And they're like, whoa, wait a minute, it broke the wick. Okay, yeah, it broke it, but it didn't hold, and it really didn't get into people's stops. Okay, so their stops are going to be down in here somewhere. Okay, you don't know for sure where they're at, but the only way to know for sure is if it really starts to get $1 or a couple dollars down below. An aggressive play is to try to enter as soon as it breaks this. Right, as soon as it breaks this, but then what happens, or people try to front run it, and that's when you really get in trouble. Okay, as you can see right here, so far, hasn't been able to do it. And what's it doing? It's trying to push itself back up. I'm going to make this a little bit bigger again so everybody can see. All right, you see this? So hopefully, nobody in here tried to front run that, because I just told you, you got to get below this by about $1, $1.50, maybe even $2. It'd be a more conservative play to wait, so you don't have this go against you, right? So if you just entered short, you're already like, oh, what's going on? You're mumbling underneath your breath. You know, got all this downside momentum. No, we don't. Not right now. Not right now. I'd have to get a different tool to draw. Right now, the momentum is flat. Well, I could do it this way. Hang on one second here. Sometimes it works, sometimes it doesn't. There we go. My tool's not working the way I want it to. There we go. Okay. Okay, right now momentum is flat. It's not to the downside like we had over here. All right, so that's another thing. It's another tool, another factor that you put into play. As many factors as you can to make good decisions, right? So I could just leave this here. I could even extend it out if I wanted to, and then I should wait, right? And then if it starts to curl down below there, then light bulb goes off, and then I look for other reasons. Okay, are we taking this out? Right? Or am I getting any kind of candlestick signal? Whatever the case may be. You just stack them up, and if you get 3 or 4 of them in your favor, now it becomes a more high probability play. Okay? So you can see it's still pushing to the upside right now. And you just look down here, and I can look, and I can just say, there's no momentum either direction right now. Either direction. It's flat. Here was strong to the downside. And this was just all chop in here. Can you take trades in here? Of course you can, right? If somebody timed this pretty well, they could have caught that bounce right there. You know, same thing right here. Could have caught that bounce. Okay, it's a lower probability play because you can see drop, up, down, up, down, up, down, up. You know, you're just whipsawing back and forth, up and down, and it's just, this was highly probable. This was highly probable through here. Okay? Just looking here real quick again, we're going to see, is it going to make another run at going lower? If it does, just watch. You want to be below here. Okay, you want to get below there, $1, $1.50, $2. Then you're starting to think, okay, the momentum is going to probably start to shift back in my favor, and you already know where the targets are. We'll see here. I'll tell you what I'm going to do. I'm going to set an alert. So if it starts to dive that direction, we'll know about it. Okay. All right. So I got an alert there. If it does start to dive, we'll know. All right. So because I was asked about supply and demand, let's cover that a little bit more. Okay, so Rohan, he says, doesn't that red candle say that there are no more buyers so far? Are you talking about this one right here, Rohan? Are you talking about this one? Because obviously, this was a move down, okay, then it stopped right here. Yes, okay, yeah, we moved down, and you see we caught resistance right there, came up, we moved down, then we moved back up again, and we're trying again, right? We don't know until it gets down in here, right? Because think about it. At one time, what was this candle? This candle was huge red, huge red. It was like similar to this at one time when it was way down here. And what did it do? It spiked clear back up here. 20 some dollars from here up to here. Okay, a lot of traders would have looked at that and said, doesn't that mean that it's over, right? No more buyers? So you can't make those assumptions until you get these other factors involved, right? I would have been looking down here. Now, I wasn't trading at that time and I didn't want any part of it, but I would have been looking down here saying, we don't have any momentum. There's no momentum. And you know, everybody knows, or you should know, that between about 11:30 and noon and 2 o'clock, most days, you get a lot of chop and a lot of ranging, just like we had right here, okay? Then starting about 2 o'clock till about 3:30, you're going to start to get more movement that is fluid. I would call it fluid movement. And then between 3:30 and market close, then it gets really volatile. Now, some days they'll pin, right? Some days, you'll be waiting for that volatility and they'll pin it. But a lot of times from 3:30 to 4 p.m., market close, it gets really volatile and really manipulated. Okay? Look at that. We still haven't taken out where I got my alert. Went down, pushing back up again. But I am looking down here. Look, momentum is starting to get below our line here. So I would be, if you're somebody who wants to go short, I would be more attracted to this play at this point. Still haven't been able to take it out. It will anytime now. Actually, it should be taking it out. That's weird. Every once in a while, Thinkorswim just glitches. Obviously, we have the alert set and it didn't take it out because the alert was at 3002 and it is below there now. You're welcome. You're welcome, Rohan. Okay, so now, let's look again because we're starting to get that move to the downside. Let's come back over here. Let's get back over to where those candles were. Here they are, okay? So now here's current price, 302, okay? And here was this little resting area, okay? So from 2995.50 up to right about where we're at now, anywhere in here, we could see some support. And then if it breaks that, then we go lower. We go to this next resting area from 2984.50 down to 2979, okay, that area. And if you break below there, you're almost for sure going to come all the way down here. So we are in this area right now. And it looks like we are catching some support already. Let's come back over to current price. Yep, see? Let me, I'll zoom in. Okay, already catching support because we got that zone over there. That's why you look to the left. So we're catching some support already. Doesn't mean that it's going to hold, right? It may bounce a few times and then eventually be able to break through. But we know down to, what did I say, 2,995.50, down to there, that's that wick over on that rally base rally, that resting candle. And that is a likely area to catch some support. And we did, okay, at the very top of it. The very top of that resting candle, or excuse me, the top of the body of the resting candle, down to the bottom of the wick. Anywhere in that area is an area that we could see some support and should expect it. So it got down to it, bounced up. It might make another run right here. Okay, might make another run. We'll just, we'll kind of pay attention. We'll kind of pay attention. But the things that you want to be looking for, okay, this goes for everybody. And we got a bunch of new people in here. The things you want to be looking for potential areas of reversals, pauses, right? Or that it's going to stall out in a certain area. You want to look for supply and demand. Okay, so here was an area of demand. I'm going to take it off because it's used up. It's been through there now. Okay, but that was a rally-based rally, and it did have an initial bounce. Let me get rid of that. Okay, this area here, all right, we're going to wait and see. I'm not going to take it off until this candle closes because it needs to close below there. If this candle comes back up into here or even goes green, then this area has still held. See how it barely poked out right there, but it closed way up here. Came down and touched it again, but it closed way up here. So that means that that zone keeps holding. Let me close this up just a little bit. All right, and it was created right there. This drop, base, and strong rally away. All right, so that's what you're looking for. And it was tested once, and then you got this big strong move up to here. But these levels of structure are something else that you want to look for, right? I could extend this. I could actually extend this all the way over here if I wanted to. And you can see how many times it came up to the same area and couldn't get through until it finally got through there. Then same thing up here. Tested it, tested it, tested it. And it came back down. It was highly likely that it would bounce here. And it did. Comes back up. Tests this same level again. And then that started this big down move, right? So those are the things you want to look for. And then your traditional support and resistance levels. Okay, I've got a video. You guys are all on my YouTube channel right now. There's a 2-minute video on how to accurately draw these support and resistance levels. It's super simple. All right, so watch that video. Okay. And all you folks who are new, because I know there's some new folks in here today, make sure you give us a thumbs up right here on the channel, subscribe to the channel, and turn on that notifications bell, and you'll know anytime that we go live or we upload new material. And then come to our room. It's absolutely free. Doesn't cost you a thing. We've got 300 and some members in there, and we're growing all the time. In fact, we decided to make the room totally free. Going forward, starting July 1st, everything, all the premium content is going to get moved over into the main chat and main lessons section. So we have lessons sections, we have videos of past live streams, and you can learn a lot by just watching past live streams because it's more about the price action than it is anything else. So you'll learn how we read price action and how we determine that these kind of moves are likely. And where would be the best places to enter, right? Where would be the best places to enter? On the last live stream, I used a phrase that I heard somebody else use. It's not mine. I wish it was. And they were talking about good traders anticipate the move and poor traders participate in the move. And right here is the prime example. A good trader anticipates this move right here. They don't get fooled that this is a strong move up and that they think this is just going to keep on going. And then they see this, boom, they're in and they're taking this down, you know, probably down to here at least. And then, you know, obviously you're going to have your own profit targets. I told you what mine was this morning. It was this demand zone, the top of this demand zone. And we made it on the very first candle. This went right to the top of this demand zone on the very first candle. Then when it keeps going lower, okay, a poor trader or most retail traders, I don't mean to lump them all together, they try to get in way down here. They're participating in the move. Okay, they didn't anticipate it, right, and catch all this good stuff. They get in at the end when it starts getting into this, and then they probably end up getting chopped up because they're angry. They start revenge trading, right? They get in way down here, and it goes against them, and then it just starts chopping, and they're just like, oh, what do I do? I buy, I sell, I buy, I sell, and they're just, their account's going, right? They're just using their account up. Okay, if we look over here, it's trying to make a move again. I'm going to squeeze it in. I'm sorry. I wanted to actually do this. There we go. All right, so we know, right, between about 3,000 and 2,995.50 is that wick way over to the left, which is also a resting candle on a move to the upside. It was a rally, base rally. So we got to get below 2,995, and then that would let us drop down to that next resting candle, which the wick on it was a little bit smaller, and that was around, I'm going off memory, somewhere in the high 2,970s, right? It was somewhere in there. So you could catch some support there, and then if you get below that, you should go down to like 2,966, whatever our level was. 2,966.50 maybe. 2,966.25 right there. Okay, but right here, until you get below 2,995.50, you just have to be careful. If you're short, you're good, right? You're good, but you just got to be careful and you don't let price come back against you. You know what you're trying to get below. You just got to be ready. There's too many traders. There's like a fly or something in here. Sorry about that. There's too many traders that they're not anticipating, right? They're just thinking, okay, hey, I broke below here. I'm going all the way down here. You can't think that way. You've got to know where the potential obstacles are, and you have to be ready, right, with your risk management. Okay, you got to know that unless it gets below 2,950, breaks below there and drops down to that next level, that you should probably be trailing with a stop, right? If you're in a standard contract, you could trail a stop down so price can't go back against you. If you're in an options trade, you got to be really careful. If it starts to bounce back against you, it doesn't have to go very far and all your profit can be gone. That happens all the time. That fly is driving me crazy. There's one fly in here and just driving me nuts. Okay, so we're still 2,997. We're seeing if it's going to break through or not. So you guys are watching this real time. You see the struggle it's having in that range from 3,000 to 2,995 basically. It's been struggling there for quite a while now. It's made a couple attempts and bounced, made a couple attempts and bounced. Now it's in that range, but it's really struggling. It's not just blowing right through there. Our momentum is starting to fade a little bit, okay? Starting to get a little bit below. Okay, that's why I drew this line, because this is going to help us to know, like if we just saw it all of a sudden starting to curve, especially before that starts to drop, that would be a really good sign. Okay, it's just barely fading below there, and as you can see, again, struggling. We're back up to 3,000, 29.99. So when you watch price action, you should be filing this stuff away in your mind, right? You should file that away every time you see this. Okay, I see how it reacts when it gets to a resting candle, or when it gets to a big wick, or when it gets to a level of structure, or when it gets to supply and demand, right? I see how it reacts. And then what do? You anticipate the next time. You anticipate what's likely to happen. Still haven't been able to get through. Okay, see that? Now, again, that's not to say that somebody couldn't have scalped a couple of dollars right there. Somebody could have taken the break of this, that's 3,003, and they could have scalped it down to, you know, $29.99, that's $4 or $29. It got as low as $29.96.75. They could have took it down to maybe $29.97.50. And as soon as they start to coming back against them, or they could have been trailing it, yeah, you could have scalped a few bucks, right? But if you were looking for the big move, right? If you were looking for it to just go from here to here, you just got to know which obstacles are in your way. It very well could, but some other things would have to change. See down here, we're just barely below there. We're still flat. That's why I drew this line so you guys could all see that. Okay, momentum, still flat. Look what we're doing. See this? Couldn't get through that wick, that resting candle over to the left, and it pushed all the way back up here around that the bottom of that demand zone again. Let's see, we got a little bit less than 9 minutes on this candle. A little bit less than 9 minutes. Oh, I missed him. Thought I got him. All right. Does anybody have any questions about what we've covered today? Okay, I had a request about, you know, supply and demand basics, and I wanted to show everybody, you know, how I knew what price was going to do this morning and where it was likely to go. And again, I did not know that it was going to go clear down to here. What I did anticipate was that it was going to get at least to here, to the top of these basing candles. And it did that on the very first candle of the day. Then once it broke through that zone, then it became more likely that we were going to probably get back or go down into this zone here. All right, it's not like this stuff makes you some magic, you know, fortune teller, right? But haven't you noticed that there are a lot of people that seem to have a better grasp on what's going to happen than others? And they don't all do it the same way, right? One of the things about me, and if you're new, you'll learn this, I'm not here to tell you that some other way isn't good too, because I don't believe that. I've been trading on and off for over 28 years. Okay, I have not traded the same way that entire time. Okay, so I already believe there are other ways. Okay, I believe this is a more consistent way, and it's simple and it's basic. Okay, there's no complex strategies or complex math or things like that that you have to be worried about. We trade price action, support and resistance, and supply and demand together, the three of them. Price action being the most important thing. Price action is what are the candles telling you, right? That's the most important thing at all times. And then support and resistance and supply and demand help you to gauge where price is likely to go, where it's likely to stall, where it's likely to turn. That's why you want to have those things incorporated in. Let me see here. As I'm talking, I notice it's all the way back up again. We're up to 3006. You see this? We've got a little bit less than 6 minutes to go. I'm gonna hang out at least until the start of power hour here, because I want to see what happens. I want to see if we start down here, does momentum start to go one way or the other? Still completely flat. Completely flat. Okay, I don't see any questions right now, so I'm kind of waiting. And but anyway, to complete that thought, you may notice that there's a lot of people, or I shouldn't say a lot. There's actually a few. There's a few people that always seem to have a pretty good idea of where price is going to go. And I'm not talking about exact numbers. Those people that make a big deal that like they hit something to the tick or whatever. You know what? It doesn't really mean anything. What really matters is that you know that something like this is going to happen, right? You know it up here, not down here. It does you no good to know it down here, right? You need to know it up here. That's what that other teacher means by good traders anticipate, poor traders participate. That's what he means, okay? A good trader knows up here that this is coming. They know it, right? They know it here. Whoops, here. They know it here before it happens because they put all of this stuff together, okay? And they could see that the momentum was starting to turn, right? I wouldn't have had that line there at that time. They already see that the momentum's turning. They get this beautiful shooting star off of this level of structure that price has not been able to get through. Okay, and again, you'll hear some people they'll give you these hard and fast rules that, okay, once price has been tested twice, the third time it's going to go through. Oh, really? 1, 2, 3, 4, 5, okay, 6. 6 times this level's been tested and it didn't go through. What did it do? It sold off. Hang on one second there. I appreciate that. Thank you. Thank you. I just try to keep it simple, right? I just try to make it as simple as possible for everybody. Things that are complex do people no good, right? I know guys that are friends of mine that are teachers that have these very complex, and they always say proprietary trading systems and this, and some of them are based on mathematics and some of them are based on, they've got all these criteria. Well, if it does this, then you do this, and then when it does that, you do this. Well, the problem is when it's too complex, people get paralyzed. Analysis paralysis is what it's called. They're too busy analyzing everything and they're not executing. And their mind and their eyes are not free to see what's happening right in front of their face. Okay? Again, I'm not saying that some of those complex things don't work. They just don't work for everybody, right? They just don't work for everybody. It takes a certain kind of person. I know a guy, he's a good friend of mine. He trades based on a bunch of complicated math. All right? Well, not everybody's good at math and formulas and this and that, and he's pretty good at it, but most of the people who try to trade like him struggle, right? They struggle. It's just so complex. But you've got to learn as a trader, everybody in here, you've got to learn to be able to see stuff like this and know, again, know right here that price is likely to bounce right there. Okay, I saw that coming a mile away. But most people would think it's going to come down in here. Yeah, maybe eventually. Okay, but look at all the times, and again, you can draw this back way over here, all the way back over here, and look how many times it had tried to get through that level. It couldn't. When it finally breaks through, it now becomes support. So the next time it comes back to it, right here, you've got to know, again, nothing's 100%. I want to be clear about that. But you got to know that it's likely to bounce right there. It's likely to bounce. And then where is it likely to go? Right back up here for the 6th time. This is the 6th test. Thanks, Quantability. I appreciate it, brother. He's one of the members in our room. And I appreciate each and every one of them. And I definitely appreciate those kind words from you folks. Okay, still, we cannot get down in here. It was starting to go down again, but we haven't been able to get through that wick. I'm going to hang out just a minute or two more. We'll see on the change of this candle. Obviously, we're going to go into power hour. There's the change. Okay, new candle starting. We're going to see what they do early on this new candle. Okay, I'm immediately trying to push up. Okay, you'd want to see it take out the top of this, which is at 3,009.50. So if you're thinking about a long, okay, right now I'm not interested in anything. I'm just telling you. But if you're thinking about a long, you'd want to see it get to about 3,010.50 or even a little bit higher than that, 3,011, something like that. Okay, see it's trying to push up here. So if you're thinking about a long, not only do you want it to break this, you want it to break it by more than just 2 or 3 ticks. You don't want it to just come up here and maybe touch there and then all of a sudden start to sell off. So we'll watch it here for a minute or so. And if somebody's short, right, that's a pretty good indication you don't want to be short anymore too. If it breaks this, especially by maybe $1 or $2. Oh, those phrases, I only said the one before. The one is if you're short, abort. Okay, so for these traders that like put their stops down here, or excuse me, that was up here. Okay, they put their stops up here on a short play, and it comes all the way back through, and it takes your stop out. So that one guy that has those phrases, so if it's up here, he says if you're short, abort, and then down here, okay, if you think it's going long from here, and you have a stop clear under the wick of this candle, if you're long, you're wrong. That's what he says. And he says, I say them funny because I want to remember them, and I want my mind to be awoke that I got to get out. Right? I'm wrong, right? I don't want to be in this trade. Now, I personally don't put my stops like that. I always keep tight stops. I know people on both ends of the spectrum, by the way. I know people that they always put their stops below like something like this or above something like this. Then I know another guy, he's exactly the opposite. If he's 1 penny wrong on a stock or 1 tick wrong on a futures, he's out. And his philosophy, and I kind of agree with it. I give it a little bit more than that, but his philosophy is, hey, I can just re-enter if it goes back my way. I'm not letting it go against me. So there's days he'll have all kinds of little tiny stop outs, but then he'll catch the big gain. Right? Those little stop outs for 1 tick didn't hurt him at all. On here, $12.50, right? You could take 10 of those and you're only down 120, whatever it is, whatever the math is. I'm not good at quick math. 1250 times 10, $125, right? So you could take 10 of those 1 tick stop outs, and then if you're right and you get, one of these moves, one of these moves, one of these moves, you're way ahead of the game. So, like I said, I know guys at both ends of the spectrum. The ones that'll put their stops way down here when they think they're going long, and then the guy who, if he enters above here, if it goes 1 tick against him, he just stops out. And he'll just do it over and over again as long as price is right up here, because he knows once it starts going his way, he's going to make money. So that's the kind of guy, he could care less about win rate. For him, it's all about a reward to risk. He doesn't care. Like if his win rate's 35%, he doesn't care. He only cares about the profit that he's going to make. All right, you see, we never took it out. And we're still flat down here. No momentum. Could not take the top of this out. Now it's slowly inching its way back down. This is why you don't want to front run something. And for anybody who's new, and you may be asking, what does front run mean? That means you're entering before you really have a trigger to enter. So if our trigger is we want to take the top of this candle out, this wick here, and we want to do it by $1, $1.50, or $2, that's our trigger. Well, if it doesn't trigger, then you shouldn't enter. If you enter before that, that's called front running. Okay, you're thinking, well, I'm going to make an extra $1 or $2. Well, the risk of trying to make an extra buck or two is if it goes against you, you may lose several dollars, right? And so you're coming out on the wrong end of that equation almost every time. People who front run, typically they're not good. Not always, not always. You can never say 100% about anything, but most people who try to front run, I've got a friend of mine that runs a different room, and he tells me all the time, one of the biggest problems he sees with the traders in his room is that too many of them try to front run. He'll tell them exactly, based on his strategy and his, whatever. He'll say, here's where you should be looking to enter long, or here's where you should be looking to enter short. And he'll say, don't do anything unless you get there. And guys will try to front run it, and it never makes it there, and then it goes the other way, and then people are chiming in his chat, oh, the analysis was bad and blah, 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 and I lost a bunch of money. And he'll just say, why did you enter? I said, do not enter unless we get here. You entered way up here. You were trying to make an extra couple of bucks, and then price went against you. That's why we have triggers. That's why you have setups, right? This is a setup. Strong move, countered by a shooting star that bounced out of a level of structure. That is the setup. The trigger is when it breaks below here by $1, $1.50, $2, whatever's your comfort level. That is your trigger. This is the setup. That's the trigger. If your trigger doesn't go off, you shouldn't be in the trade. It's as simple as that. Okay, so hopefully you guys are learning this stuff. Yes. So his question is, do I ever trade on anything lower than a 30? Absolutely. I take most of my trades and I do most of my analysis on the 30-minute. It's my favorite time frame. I think it's the perfect mix of longer time frames, higher time frames, and shorter time frames. But if I do take anything, it'll be typically the 30, the 15, or the 5. I don't typically go lower than the 5 unless I'm trying to teach. A couple months ago, I was trying to, somebody was asking me, does my analysis and strategies work on any time frame? And I was like, yes. So what I did is over the course of about, I think it was maybe 2 weeks or less, each day I was trading different time frames, and I traded anywhere from a 1 hour. Actually, I think I traded anywhere from a 4 hour, but I think in that example, I traded anywhere from a 1 hour all the way down to a 1 minute. So each day I was trading different time frames to show them the analysis and the strategy works on any time frame. You're just going to have a lot more noise, right? So we're on a 30-minute right now. Let me change it just to a 5. I'm going to change it just to a 5. All right. And now we're going to look at the same stuff we were just looking at. Give me a second here. Whoop, went too far. Being a little touchy today. All right. This is just the chop between basically 10:30 and 2:30. This is 4 hours of chop. Now remember, on the 30-minute, that's only how many candles? 8 candles. Look at all the candles. It's a lot more noisy, and this is just a 5-minute. This is usually as low as I will go. Now, why do people go to a lower time frame? A couple different reasons. One of the first reasons that they go to a lower time frame is they're looking for more precise or better entries. Okay. All of this is what created that 30-minute shooting star. All of this. Now, if somebody wants to be as precise as they possibly can, okay, if they're on a 5-minute, they're going to try to enter right here. All right? And they're in a little bit earlier. You see that? Okay, that is the top of that 30-minute shooting star that we looked at. Okay, our entry would have been, more down here. The higher the time frame, the more accurate it will be overall. Okay, because you're going to get a lot more chop and you're going to get a lot more noise on these smaller time frames. Remember, once that move started on the 30-minute, remember how smoothly it moved down? Okay, so all of these candles right here, there's going to be 6 of them, is that little spinning top right before the first candle of the day. First candle of the day went all the way down to the top of that demand zone that I showed you guys that did eventually break. All right, but these 6 candles represent that one little spinning top on the 30-minute. Let me show you. And then we're going to wrap it up. Give me 1 second here. Come back over here. See that? Those 6 candles I showed you are this one candle right there. To me, this is way easier to trade, right? Entering here. Now on the 5-minute, you would have been entering way up here. Okay, but to me, this is so much cleaner. And then, remember on the 5-minute, this was all wavy through there. All them candles wave up and down, and it's a lot harder to stay in a trade. Okay, to me, this is way easier to stay in a trade. Okay, and this, I'd much rather see this one spinning top than those 6 green candles. But I will trade the 5-minute occasionally. Very rarely. He's asking, they're asking if I trade NQ. ES is my favorite. I also trade forex. I do trade stocks once in a while, but I prefer to trade futures and forex mostly. And I recommend that actually newer traders. I recommend that you either start on like forex, or if you can get a futures account, because for one thing, there's no PDT rule. And depending on what brokers you go through, like some people, they'll say, well, I don't trade futures because they're so expensive. Well, there's certain brokers out there, futures only brokers, that give you discounted margins. So during the regular trading day, you can trade with way less money than you think you need. You can trade some currencies. So on futures, you can trade currencies. They're not currency pairs. You will trade the euro, or you will trade the yen, or you will trade, the Swiss franc or whatever. You can trade those things for like $50, $50. You can also do that on a forex account. No PDT rule. That means you can take as many trades as you want during the day. And on some forex only brokers, you can also trade really, really small size. Okay, so newer people that are just starting out, I try to kind of gently push them that you should probably start out trading either forex or futures or a combination of the two, because you don't have to worry about PDT and you can take very small size. So anyway, I'm going to go ahead and wrap this up. I hope everybody has enjoyed it. Again, check us out, simpletradinglife.com. Absolutely free. Join our chat room. Definitely give us thumbs up here. That helps us with YouTube. Subscribe to the channel. Turn on that notifications bell so you get notified. And then check us out next week. I'm thinking about doing something in the future. I just haven't decided. Most of the people in my room have smaller account sizes. There are some people in my room that have bigger account sizes. And I like to just trade, period. Small, larger, it doesn't matter. Okay, like last couple weeks, I've had some really nice gains and stuff like that. But not everybody relates to that. Okay, more people seem to relate to the smaller size. So I've kicked around the idea of doing something where starting really small, whether that's $100 or a few $100 or whatever, and showing how you just slowly at the beginning, it's all by percentage, build your account up to where you can take a small amount and turn it into a bigger amount a lot quicker than what you think. Okay, but you have to trade smart. It's all about percentages. So somebody who starts off, I'll get to your question in just a second. Somebody who starts off and maybe they only have, there's several people in our room that only have 100 or a couple $100 in a small account, and they struggle because they think, I've got to double that today, right? Or triple it or whatever. When in reality, I tell them, if that was $1,000 and you made $100 today, you'd be thrilled to death. That's only a 10% gain. So if you have a $100 account and you make $10 or $15 or $20, that's awesome. And you get out and you lock that profit in. Well, now you're working with 115 or 120 the next day, right? Pretty soon, 3 or 4 days later, you are up to $200, right? Now you make 20 or 40 or whatever, 20 is only 10%, 40 is 20%, you're up to 230, 240. It doesn't take very long, and you've built that account up, and you're now able to trade with a little bit more size. You want to always be cautious. We always talk about risk management. You do need to be a little bit more aggressive when you have a smaller account, but you shouldn't be risking it all, right? You don't have to double it at the very beginning. So anyway, let's see here. Premium room, we're shutting the premium room down. Everything's going to be free. All that content is coming over to the free side of things, and everything's free. So you don't have to pay anything. Our room is like, starting July 1st, there won't be any more premium room. It's just one big room, and everybody gets everything, okay? And then forex says, forex is slow, how do you like it? Not all forex is slow. Some of the pairs are, some of the currencies are, some of the currencies move like crazy. Okay, forex is the biggest market in the world. It's way bigger than the American stock market. I mean, like, immensely. It's not even close. On average, it's like $5.5 trillion are traded on forex every day. Currencies. Okay, the U.S. stock market doesn't even, come close to that. So it's all perspective, and it's all trading the right things. So, okay. When you say there's no volatility, I'm not sure like what you've got to be talking about certain pairs or certain currencies, because some of them are extremely volatile. Others, there is hardly any volatility. Now, you may be saying volatility in terms of like the volatility that you think of on a stock or in a futures or in options. You may be referencing that, but in terms of being volatile, some currencies are extremely volatile. Like there are some of the like absolute biggest traders in the world, they only trade forex. They don't trade anything else. They don't even want to trade the stock market. It's the most liquid market in the world, meaning you can get in and out, no problem, really easy. You can trade really, really small size, really, really big size. And again, if you're playing the right currencies or the right pairs, there are some that are extremely volatile. And you can actually make way more money in forex than you could in other things. So anyway, just looking to see. No, not from New York. Not from New York. Okay. No, there's no more questions. So everybody have an awesome weekend. You know what we're looking for here. We know, it either has to break up here or it's gonna get down here below 299.550 and below, and then it'll drop down to that next level. But if you guys need anything, come join the room, simpletradinglife.com. We'll see you in there. Have a great weekend. Bye-bye.